Let's get a quick word on the Fed. Are you expecting anything to move on the back of this? Are yields going to move?
I don't think there's going to be much move right now. I think different comments from different Fed governors there's no consensus really there. I think some of the hawks are looking to raise rates before they end their quantitative easing. Other ones are saying let's taper first and then raise rates. But I don't think there's anything really shocking coming out today.
You still don't like the bond market?
No, there's not enough compensation above a natural level of inflation. I think all the printing of money is going to be inflationary eventually. That's not in the system yet. But if you're buying a long-term bond, you've got to deal with that risk, and you're not getting compensated for that.
When we last spoke, you were shorting European equities. I think you've been shorting European equities for a while. Is that still the case? Are you covering some of those shorts now, given the gains that we've had?
We're short the index, so we're short the Euro Stoxx 50. We're long European equities in a similar amount, so our European positions are pretty much neutral, but still comfortable to be short the index. There's a good potential Draghi disappoints equity markets because everyone's expecting either negative interest rates or some sort of explicit quantitative easing, and he's disappointed a lot in the past, so I'm a bit worried about that.
You say you're long some of the markets in Europe. What are you long?
We own mostly consumer stocks. We've got some of the auto companies. We've got LVMH, Swatch, L'Oreal, companies that are selling to Asian consumers. We think that's a trend that's not going to go away. You're getting 10% revenue growth every year, and we think that's sustainable.
Hey, can you give me a comment on Burberry? Because of what you've just mentioned, that we had some remarkable results from Burberry. They sell a lot in Asia. Is that something you do?
We don't actually own that one. That would fit into our theme, but it was a bit more expensive than some of the ones we own. But that basket, that fits that theme very well. And I think any company that's got a very strong brand, that has a price setter and exposure to Asia, I think those stocks are going to continue to do well.
Is oil still the best hedge for you?
Well, oil's a position we're long. We think it's a participation in global growth. You're seeing global growth continue to belong anyway, and it is a bit of a hedge against geopolitical risk. That may be subsiding a little bit if you believe Russia that they're withdrawing troops away from the Ukrainian border, but on the other side there's some dispute whether that's happening or not.
And just on that, to finish out with the election in the Ukraine this weekend, presidential elections, is it on your radar at all?
Hope not. Looking at it, seeing what's happening, but I don't see any clear outcome that's going to end this quickly. Hopefully there will be an election that goes through without much consequence anyway.
All right.